All right, let's dive right into this unfolding market action because the numbers today, they are moving incredibly fast. With our mascot Loro leading the charge, today's explainer focuses on one massive headline, the KOSPI surging 2.42% for a fifth straight day. Yup, up 2.42%? That's our baseline right there. And we aren't just looking at some random, sudden blip. This is actually the index's fifth consecutive day of a pretty undeniable aggressive rally.
The momentum here is just staggering. The KSOPI absolutely smashed past the 6,977 mark, which anchors a very sharp, very distinct upward turn that we're seeing right now.
So, you might be wondering what exactly triggered this huge momentum. Well, we've got to look stateside. The U.S. July Producer Price Index, the PPI, just came in well below market expectations. And this weaker inflation data, it's exactly the macroeconomic spark that's fueling this whole fire. And honestly, the market's reaction was instantaneous. The odds of a September rate hike completely plunged. We're talking a drop from a 40% probability down to just 32% in an absolute flash. The market is clearly pricing in a massive shift.
And this sentiment instantly spilled right over into the bond market. Treasury yields reacted super fast to that inflation miss. The 2-year yield fell 5 basis points to 4.149%. And the 10-year? That dropped 5.6 basis points down to 4.636.
Because of that, across the Yeouido financial district, you could literally feel the collective relief. Those dropping U.S. Treasury yields immediately supported the Korean financial landscape, basically easing the pressure across the entire equity space. Now, why does that matter so much for your portfolio? Well, it all comes down to the discount rate. Simply put, that's the interest rate used to figure out the present value of future cash flows. When this rate drops, the valuation burden on tech and semiconductor stocks eases up massively. It acts as a powerful, direct catalyst for the whole sector. But there's a micro-catalyst here too, and we need to pivot sharply to it. SanDisk's recent Investor Day provided massive, undeniable confirmation of memory demand. They essentially converted theoretical expected NAND demand into actual confirmed orders. And the sheer scale of this commitment, it's staggering. SanDisk secured long-term contracts that cover roughly 50% of their fiscal 2027 shipments and about 66% of their fiscal 2028 shipments. They're basically locking in massive volume and securing their future prices today. So how does that actually impact the KSPI? Well, both Samsung Electronics and SK Hynix are huge producers of NAND memory. When a giant like SanDisk confirms this kind of heavy demand, it directly fuels the massive surge we're seeing in both Samsung and SK Hynix shares today. Because of all this, right now, the tech sector is glowing a brilliant green. I mean, it looks like a broad, incredibly healthy market rally across the board, right? Well, keep that idea in your head, because we're about to set up a pretty wild investigative twist. Okay, let's reveal the illusion here. Foreigners did pour massive capital into the KOSPI today, but the concentration is wildly skewed. Get this, 93.3% of that foreign net buying was funneled into literally just 2 names, Samsung Electronics and SK Hynix. So it's not a broad rally at all. It is heavily, heavily concentrated. And this brings us to canary number 1. We've got a really stark divergence playing out. You have these aggressive foreign capital inflows totaling 3.05 trillion won, and they are totally contradicting heavy domestic exiting. Retail investors are actually selling off to the tune of 1.98 trillion won. Let's break that retail selling pressure down a bit further. Out of the nearly 2 trillion won the retail sector just dumped, 829 billion was Samsung and 659 billion was SK Hynix. That means over 75% of their net outflow exited the exact 2 stocks that foreigners were aggressively buying up. Now, add the institutional behavior into the mix, and the plot really thickens. Institutions dumped over 1.03 trillion won total today. Where did it come from? 498 billion in Samsung and 552 billion in SK Hynix. They're dumping the exact same chips. Let me just hammer this anomaly home for a second. Institutions sold 102% of their total KOSPI net selling balance in just those 2 chip stocks, which means they were actually net buyers in the rest of the market, but fiercely rotated out of the exact names foreign investors were aggressively accumulating. Wild, right?
Before we hit our second canary, let's take a brief but super important tangent. Morgan Stanley just switched their top tech pick to Samsung Electromechanics. They cited rising AI data center demand for MLCCs, which are essential ceramic capacitors. The stock jumped an incredible 12.58% on the news, lifting a bunch of related component makers along with it. Okay, but let's introduce canary number 2. Applied Materials over in the US just beat earnings, right? Their Q3 EPS was up 41% year over year, a huge beat. But their Q4 margin guidance was completely flat. And because of that flat margin paired with high valuations, the stock dropped nearly 5% in after-hours trading. That flat margin guidance actually triggered a hard divergence in Korean equipment makers today. Packaging and tester stocks like Unitest and TCK completely surged. Meanwhile, deposition stocks tied to Applied Materials like Wonik IPS and Jusung Engineering fell. The market is violently splitting winners from losers right down the supply chain. So I want to leave you with this final provocative question. As we look at these extreme concentrations, massive foreign inflows, battling domestic exiting, and completely diverging supply chains, will confirmed memory demand truly outpace the shifting valuation burdens in the weeks to come?
It's definitely something to keep a close eye on. If you would like to receive news on the closing of Asian stock markets before the New York stock market opens, please subscribe.